Your family stability starts with owning a home. But if you're a veteran, there's one rule that could decide whether your loan gets approved or denied. And most veterans never hear about it until it's too late. Hey guys, welcome back to the channel. Robert here. On this channel, our goal is to simplify the home loan process. And today we have a good walkthrough for those of you that have the benefit of using the VA home loan. We're talking about residual income. So without further ado, let's get into it so that you're not caught off guard and you're able to get in your home when you decide to make that step. Residual income is the money left over after you've paid your housing expenses and debts. You see, the VA wants to know you still have enough left over for your family's daily living expenses. Things such as food, clothing, gas, kids' needs, so on and so forth. Think of it like your financial breathing room. If you got enough left over, the VA knows you're less likely to struggle or lose your home, aka being house rich and cash poor. Here's a twist. Residual income is a guideline, not an automatic yes or no. But if it's too low, it can be used to deny your loan. So if you're close to the guidelines, the underwriters will also look at your handling of your bills in the past, aka your credit history, and even the ages of your dependents. So how is it calculated? We use the VA form 266393, the loan analysis. This is where we plug in your debts, housing cost, and your family size to see how much is left. And the numbers change depending on your loan amount, family size, and even what part of the country that you live in. The loan amount and family size matter, right? So for loans that are under $80,000, they add $75 for each family member after 5 people. For loans above $80,000, they add $80 for each additional person. So yes, your household size directly changes the requirement of the reserves for the residual income. Where you live also is important as well. The VA splits the country into 4 regions. So we have the Northeast, the Midwest, the South, and West. Each has its own table with the required reserves or the residual that you have to have left over after the calculation, because the cost of living isn't the same in Texas as it would be in New York or California. So remember, where you live matters as it pertains to the calculation. Now, there's some family size rules that I want to hit just briefly that I think might be pertinent for this education. But your family size counts, it matters, okay? Everyone in your household, even your spouse, is going to be included even if they're on the loan or not. Sometimes your spouse may not have to qualify with their income, but with the residual income, it matters, okay? And so we look at your dependents, and your dependents will be defined as anybody that you claim on your taxes. But there's some exceptions, as with all things in life. If your spouse or your parent has their own steady income, or if you get regular foster care or child support payments, they may not be counted towards the household size, they meaning the dependents. Here's the deal. I make free videos for you. I actually know what I'm talking about. And if you implement, it will help you and or your family get onto the property ladder. Only thing I ask is that you hit that subscribe button and the notification bell, okay? Now, when it comes to proximity to bases and things of that nature, there's also some benefits. There can be a 5% reduction in the residual income requirement for active duty, retired service members, and certain disabled veterans who can use military facilities, aka the PX, right? You buying stuff from the PX, you don't pay those taxes. So that could also help if you're tight on your residual income calculation. And that's something your loan officer should know and understand. But the residual also plays a part when you're looking to do a refinance. VA IRRRLs are very popular, and we want to protect you, the veteran, or the active duty person that's refinancing. And so with the residual income, it's even used to check to make sure that the new loan meets a net tangible benefit. And all that basically means is that you're going to be left off, or you're going to be in a better position after refinancing than you were prior to. There's recent studies that suggest over 75% of those of you that have qualified to use the VA home loan benefit, aka your certificate of eligibility, don't use that benefit. The reason the majority of people don't use it is because of lack of awareness, understanding of the loan benefits, and then the perceived higher cost for non-VA loans. If you've earned that benefit, you should be using it. If you know of anybody in your circle or your family who has that ability but has been told not to, reach out so we can make sure that you can get what it is that you deserve. If you have any non-medical debt collections, non-medical that you haven't paid, okay, we're going to look at that and make an assumption, a calculation, or a payment amount, if you will, for that debt that you're not paying back, or collection that's non-medical. And we're going to take a 5% or 5% of the balance of that outstanding collection debt and factor that into the residual income calculation. And so even if you're not paying it, it can still count against you. So what I'm saying, guys, in closing is this: residual income is the VA's way of making sure you can take care of your family while owning a home. AKA, we don't want you to be house rich and cash poor. And it's different from the debt to income ratio. And that's very important to understand. So it can stop your loan. And if you're not prepared, this is one of those gotchas, okay? If you're thinking about getting onto the property ladder and using the best loan for homes, residential that is, that's out there, in my opinion, if you qualify for that VA loan benefit, don't get caught off guard. I'll put together a free discovery call so that we can walk you through the numbers step by step, if we're fit, and help you make the right decision on the largest decision most of us make in our adult lives, and that's when we're purchasing a home. My contact information and that link, will be in the contact information, either in the pinned comment, the first one, or the description below. Remember, guys, your home ownership journey should be about stability and not surprise. So my time is up. I thank you for yours. As I always say, let's be good to one another. Let grace abound. And before you get out of here, check out this video right here. And till the next time, indeed, y'all stay blessed.